I think it's all got too difficult for asset managers. That process has ended up in an absolute mess of complexity and cost and restriction.
Really big mess. So the bigger, the messier.
Huge amount of reconciliation and blizzards of reconciliations both between internal systems, internal platforms, and with external service providers. A lot of managers find it very difficult even to work out what their own assets under management are. So, giving clients accurate data is a major challenge.
The data sort of ran away from the firms because the main focus of the business was around the investment idea.
Outsourcers are stuck in a lot of cases in a daily cycle with an assumption of an accounting-centric view of data management, where you flush and refresh on a daily basis. If your whole architecture and your whole mindset is stuck in that way, then it's very, very difficult to extend services. What we need is to adopt some blockchain-like design principles in the data management. The way in which particularly position and transaction data is going is you get the transaction data right in a granular way, and you accept that transactions are not just accounting entities, they're life cycles. And you can pull off whatever book of record you want from that set of transaction data. Yeah, we just have to get away from the idea there are multiple books of record. There's one book of record. And that one book of record isn't comprised of positions that you're enforcing on other people. It's comprised of very rich transaction histories and very rich transaction life cycles. And from that, we can derive whatever we want. I mean, we're basically growing up from a position where the standard asset manager and service provider architecture was based on snapshot data and batch architectures and on a daily cycle. And we're growing up from that to seeing that the data that underlies these services is actually all time series data. It's all events in a time series.
It's about views in the new architecture. So it's all become views going forward. These are event-driven architectures. I think it does fundamentally change people's views of these boards and views of this silo database-centric way that they've thought about their infrastructure for a long, long, long time.
For those companies that are targeting data management outsourcing, they can only serve to improve the quality of data across the industry. I mean, the question clearly is, can they accommodate the needs and specific requirements of all their potential clients? But
the power of being a service provider is you can transfer the financial risk to us on data quality. If we're the service provider, we take financial risk that data is right.
The collective wisdom of these asset managers will help build upon these solutions.
But the key question is, how long is it going to take to get there, and how much is it going to cost, and who's going to do that work? Because the asset management is pure data. Data structures are power structures, and all the various players in the industry and the ecosystem are hanging on to their data, and that's a particularly rational thing to do. I think there are just cultural sort of blocks at the moment for managers reinventing themselves or a bit of creative destruction.
Asset managers will increasingly be able to focus on their real tasks, which I think are twofold. One is improving the quality of their intellectual property about markets and conditions and investment. And the second is looking after their clients.
It's hard for people to see it. The speed at which things will operate, the decision-making, the dramatically reduced number of people. I think the world just speeds up in a way that's hard for people to understand right now.
A really strong division between winners and losers. It won't just be a bit different. It's going to be an enormous gulf and abyss.